Everyone, and welcome back to the Velocity channel, where this is your bridge to financial freedom. And today we're going to go ahead and eliminate another gargantuan loan, $90,000, and we're going to do it with the money that we find within our checking account. You do have it. But before we get into that, please like, share, and subscribe so that everyone around the world can know the power of Velocity Banking. Are you ready? All right, so we want to make sure that we got this right, okay? $90,000, all right? $90,000, and this is a loan. And remember, loans are usually what? One way. That means you cannot pay, borrow, like you can with the credit card. This particular loan is going to be at 12%, and we've got $1,759 as the monthly payment. Now, wait a minute, CJ, that is a large monthly payment. Is this a mortgage? Is this a student loan? What kind of loan is this? Is it a car loan? Listen, folks, it doesn't matter. It doesn't matter what loan this is. What does matter is we are going to pay it off so that we can capture this cash flow. We want this number right here. Now, just for those that don't know, that minimum monthly payment of $1,759 is getting split up, meaning this $1,759 is not going towards the principal. It's getting split. Let me show you what I mean. If you're going to pay it the way the bank tells you or commands you to pay it, you're going to make sure that in the first month, $900 goes to them, okay? And then $859 goes towards the principal. Now, what does that mean? That means instead of your principal going down by $1,759, okay, that would be zero interest. But because there's interest, the cost of borrowing money, it's got to be split up just like this. $900 goes to the bank, $859 goes towards the principal. Now, in the 12th month, 1 year, this is how much it goes down on the interest side, okay? $100. Now let me get this right. You've been paying $1,759 each and every month. And the interest that goes to the bank only goes down by $100. Doesn't that sound funny to you, right? So how much is going towards the principal? Well, a little bit more towards the principal, $959, all right? Because remember, what goes down in one column goes up in another. What about the 24th month? Very good question. We're going all the way to 36, okay? The 3 years. $678 goes towards the interest, and then $1,081 goes towards the principal. So we're doing a little better here, all right? Now, on the 36th month, I want you to see how much it goes down. 36th month, that's 3 years, $541 in the interest column, $1,218 in the principal column. Now, if you continue on at this rate, you're going to be out of this in 6 years. Remember, this is a 6-year loan. But the question becomes, how much interest did you spend over that 6 years, and can we take it down? Let's see how much interest it was. $36,685. Let's not forget the cents, and a quarter. All right, so that's how much you spent in total interest if you're going to continue to pay your bills the way the bank commands you to pay them. Now remember, this style of banking is going out. It's called the traditional banking, all right? And we no longer want to do things that suck the cash flow out of us. We want to do things that actually increase in our cash flow, even though it may be unconventional. Now, if you want to know more about that, what we're going to show you right now, okay? So it's called the Velocity Banking Method. Remember, the banks get paid to make money, but they don't necessarily make money on interest. These guys make money on time. Why? Because they want you paying as much and as long as possible. What is that called? They're taking advantage of this, okay? Time, and they're taking advantage of balance. Now keep this in mind as we introduce to you a new concept of doing things. Now, cue velocity banking. Over here, whether you have a line of credit or not, it doesn't matter. What does matter is that you know that there is an extra 300, an extra 400, an extra 500 in this example, dollars that you have within your checking account. Did you know that? Yeah. See, a lot of times we overlook things in our checking account and we think that we don't have any money. And that's why people that are getting the Money Max account, they're sharing with us how that instead of 30 years, they're getting out of their $200,000 mortgages in 5 or even 7 years, sometimes even 10. It all depends on that cash flow. And many of them don't have enormous cash flow, right? They don't have the $600, $1,000, $2,000 of cash flow. They've got very little cash flow. But with the money they have, they know how to allocate it. And that's what we're going to share with you here. With this $500 that you'll find within your checking account, because remember, when you get paid, is there not a space between when you get paid and certain bills? Right. Since the bank is taking care and they know how to calculate interest, right? And they go by days, shouldn't you be going by days as well? And that's what we help you do. If you need more on that Money Max account, it's in the description below. I think it's going to be on the top line, all right? $500, what do we do with it? Well, we deploy it towards the principal. That $500 extra towards the principal is going to do something that I want you to really take a hold of. It's called principal reduction, and it's going to collapse the time in which you pay off this car loan, mortgage, student loan, whatever it is, all right? So let me share with you what those numbers look like in comparison to these, all right? So we have on the interest side, $900, all right, because it's the first month, right? But we have on the principal side, $1,359. Now, that $1,359 is because we deployed the $500 to the principal side. You've got to make sure, and see, the banks are your servant, not your master. Oh, I got to say that again. The banks are your servant, not your master. You've got to take power back from the banks, and you've got to let them know each and every month, I'm going to be placing this $500 that I found in my checking account, thanks to the Money Max account, right? That we're going to go ahead and put that to the principal. $1,359 goes towards the principal. Now, that's going to be gargantuan compared to what you have on the other side with the traditional banking way of doing things. Now, what is that going to do in the 12th month? Well, it's going to decrease it way more than the $800. So let's go ahead and see what you're looking like on the 12th month. $742, $1,517. Now, CJ, why did it increase my amount going towards the principal? I mean, the first month, it was $1,359. Why did it increase to $1,517? The magic of interest transfer. You see, the more you put towards the principal, the less you have to pay towards interest. The more you pay towards the principal, the less you pay towards interest. Let's go ahead and look at the 24th month, okay? The 24th month looks like this. $550 towards interest. Look at how it's going down compared to when it's going down over here, all right? Isn't that beautiful? And then we have $1,709 on the principal side. Okay, now that's at the 24th month. Let me just write these here. Folks, are you ready for the 36th month? The 36th month is going to look even better, all right? And it's going to look like this, $333, $1,926. and it's just going to snowball, right? But instead of you being in front of that snowball, you are putting this loan in front of that snowball so that that giant snowball, right, hits and eliminates your loan very quickly. Now remember, in this loan, it was 6 years and $36,685 and a quarter that you were spending in total interest, by the way. That's total interest, and you're out in 6 years. But by just having the money that you found, right, in your checking account, it gets drastically reduced, okay? Both the years and the amounts that you are paying towards the interest. Do you want to know what this interest is? Before I share that with you, I want to share this. This is not magic. It's math. Your debt is not 100% your fault. Your debt is not 100% your fault. No one taught you how to get out or to operate in a debt-based system. This is a debt-based economy we're in. So it only makes sense to use debts as assets like the banks do. That's why we are advocates of credit cards and lines of credit. Are they dangerous? No. The mentality behind it can be dangerous. That is the difference. Because if you hold up a credit card, it's just a little plastic thing. But if you don't have the right mentality in operating that credit card, it can eliminate you instead of your debts. And we want to have these credit cards, these lines of credit, all these banking tools as debt eliminators. And that's exactly what you are. Let's go ahead and share with you what we have. 4 years and 4 months. So listen, folks, not even 4.5 years. 4 years and 4 months, you're out of this debt. And oh, by the way, $25,361.92. Folks, that's the total interest. That's over $11,000 that you've saved by the money you already have in your checking account. You didn't know you had it. Perhaps you have the Money Max account. And it said, hey, you can transfer this amount here. And it started at $50. See, it's not all at once. You're thinking that that's $500 is all at once. That's not what I'm talking about. I'm talking about incrementally. As you look between bills, the Money Max account will say, hey, wait, you have enough here. Let's go ahead and put that towards an account, an offset account, a deployment account, so that we can deploy that amount later. And as you're continuing to do this, you may even find more between that pay date and those bills, right? So that $50 adds up. Oh, you can find $100. Oh, all right, another $200. Oh, $50 here. And so all of a sudden, you got $400 right there. And then you have another, oh, wait, another $100 here. But you wouldn't be doing that if you didn't know how. Folks, we show you how. We have the machines to show you how. And we're just going to get out of the way. Folks, please get out. Get out of traditional banking. It's sucking your wallet dry. It's sucking many mentalities dry. And we don't want that. We need all the brains that we can get, all right? And we need to use all the cells that we can get in our brains. And I want you to know something. Debt freedom is within your reach. All you got to do is reach out and grab it. Click that description link for the Money Max account. It's going to be the first one on the line. I want to share with you what you've been missing and baptize you into the 21st century way of banking. God bless you, and we'll see you in the next video.